There are 4 flavors of accounting: standard bookkeeping to gather all the information, financial accounting, reporting to outsiders, managerial accounting, reporting inside the company, the detailed information that we need to make daily decisions, and finally, income taxes. Let's talk more about income taxes. Income tax accounting is its own specialized field. There are elements of income tax compliance. Let's make sure that we're obeying the law. There are elements of income tax planning. Let's make sure that we structure our affairs so that we don't have to pay any more tax than we need to. And for you and me, there's just the element of filling out our tax form. Well, here in this discussion, we'll talk about some general principles with respect to income taxes. We won't drill down to the level of actually filling out your tax form. That would be a discussion for another day. But let's make sure that we understand the general concepts, the basic terms with respect to income tax accounting. To facilitate our discussion of income tax systems, I've designed a very simple income tax system here that contains the important elements of all income tax systems around the world. So in this simple system, for income from $0 to $50, you don't pay any income tax at all. You're allowed to make that money tax-free in this governmental tax system that I've designed. For all income over $50, you got to pay a tax rate of 50%. So this is going to make our calculation simple. So again, this has all the elements of the tax system in the United States and in the European Union, and in Hong Kong, and China, and everywhere else. So we'll use this to represent tax systems around the world. So we'll answer these questions. Under this tax system, how much tax would you pay if you made $50? What if you made $51? What if you made $100? Let's do the computations in each one of those 3 cases. If you make $50, you don't pay any income tax under this system. First $50 are tax-free, so that's a pretty easy computation to do. All right, but what if you make $51? Okay, the first $50, still you pay no tax. That $51st, you're going to pay the rate of 50%, so your total tax that you're going to pay is 50 cents. This illustrates the important notion of the tax bracket. You'll sometimes hear people bemoan the fact that, oh, I got a raise, so now I'm in the next tax bracket. Well, that's kind of a naive comment, and I'll show you why. The tax bracket is this. The first tax bracket in this case is from $0 to $50, and the rate on that first $50 is always 0, no matter how much you ever make. So when you make the $51st, when you go into the next tax bracket where income is taxed at the rate of 50%, that is not applied retroactively. You don't have to go back and pay the 50% rate on the first 50. That first $50 is never taxed. The rate is always 0. That's the first tax bracket. The second tax bracket in this simple example is everything over $50. In that second tax bracket, yes, the tax rate is 50%. But let's think, should we be sad that we got a raise in this case? We went from making $50 to $51. Does that cost us any money? Well, no, it does not. Because when I make $50, I have the $50 and I don't pay any tax. If I make $51, yes, it's true that I now have to pay half of that $51st in tax. So I have to pay 50 cents in tax, but I get to keep the other half. So if I make $51, I have the first 50 tax-free, and I get to keep half of the $51st, so I have $50.50. Going to the next tax bracket doesn't cost you any money. It just means you have to pay a different rate on the extra income that you're going to make. So don't be afraid of making more money and going into the next tax bracket. That's a cause for celebration. Under this simple tax system, how much tax do you pay if you make $100? Well, again, the first 50 is never taxed at all, so the tax that you pay is 0. The second 50 is taxed at the rate of 50%, so you're going to pay a total of $25 tax if your taxable income is $100. This allows us to discuss 2 important concepts, the average tax rate and the marginal tax rate. The average tax rate is simply the tax that you owe, $25 in this case, divided by how much you made, $100 in this case. $25 divided by $100, that's 25%. That's the average tax rate, and it's a very intuitive notion. What's the average tax rate for all taxpayers in the United States? Oh, it's somewhere between 17 and 20%, the average tax rate, the tax that they have to pay divided by the amount that they make. So 25% average tax rate in this case if you make $100. Economists say that a more important rate than the average tax rate is the marginal tax rate. What's the rate you're going to pay on the next dollar that you make? And the reason that's an important concept from an economic standpoint is that's the rate that I have in mind when I'm considering, should I put in some extra time and make more money? Because on the extra money that I make, I'm going to have to pay the marginal tax rate, the tax rate on the next dollars that I'm going to make. I'm an entrepreneur with good business ideas. Should I work hard and devote my time and energy to starting that business and making money? Because if I start that business and make extra money, I'm going to have to pay the marginal tax rate, 50% in this case. So the marginal rate, that's the number that people have in mind as they consider whether they should work harder. The average tax rate just takes all the elements of the tax system and what's the average amount of your income that you pay. The highest marginal income tax rate that I've ever seen is 95%, which seems kind of high. You start to get a disincentive to work in that situation. Who paid this 95% rate? Well, back in the 1960s, in Great Britain, that was the highest marginal rate. Of course, it was only paid by people who made a lot of money. And among the set of people making a lot of money in Great Britain back in the 1960s were a musical group named the Beatles. They were paying, because they were making some money, a 95% tax rate. And they were enough irked by it that one of them, George Harrison, wrote a song called Taxman. It's the Taxman singing in this song. And the Taxman sings, "There's one for you, 19 for me, because I'm the taxman. You get one, I get 19. That's a 95% tax rate. So that's a high marginal tax rate. Marginal tax rate, what rate am I going to pay on the next dollar that I make? Average tax rate, just how much tax do I pay given all the complexities and tax brackets in the system divided by how much I made. In this case, if you make $100, your average rate's 25%. Marginal rate is 50%, and that marginal rate is the rate that you look at as you consider, should I work hard, start my own business, put in some extra hours to make a little extra money? You might be asking yourself, so why exclude some income from taxation? In this simple system, why let people make that $50 without paying any tax at all? Well, the concept here is that there is a fixed cost to living. I have to have a certain amount of money to put a roof over my head and put food on the table and clothes on my back. So let's not tax any of that money, because those are the essentials of life. Once I've got those things taken care of, okay, now the government can start to take some tax from me. So that's the very simple and appropriate, in my opinion, concept behind this notion of allowing some income not to be taxed. And this is true in all income tax systems around the world. There's a fixed cost to living. If I take money away from a person who's not making very much, they're going to have to give up some important things. Their food won't be so good. The quality or quantity won't be as good as it otherwise would be. So let's let them keep that money. Let's instead collect tax money from those who are making a surplus, because they're not giving up the necessities of life. So that's why some income is always excluded from taxation in all income tax systems around the world. Another phrase that you might have heard is progressive tax system. What's a progressive tax system? Well, this simple tax system that we've been talking about is a progressive tax system. Let me show you why. If you make $50, as we saw, you pay no tax, so your average tax rate is 0%. If you make $100, we did the calculations and saw that you pay tax of $25, so your average tax rate is 25%. In this system, if you were to make $1,000, the first 50 is not taxed at all. The second 950 is taxed at a 50% rate, so you'd pay $475 in tax. Your average tax rate would be 47.5%. So what you see is the average tax rate goes up the more money you make. That is a progressive tax system. And all income tax systems around the world are progressive systems. The more you make, the higher your average tax rate. And again, that makes sense because people who are making more money can afford to pay more tax because there won't be denied the necessities of life. So the more money you make, the higher your average tax rate. I've been careful here to say that income tax systems around the world are progressive. Not all tax systems are progressive. For example, the sales tax is an example of a regressive tax. The less money you make, the more percentage of your income you're going to pay as sales tax. And why is that? If you don't make very much money, most of the money that you do make is used on buying goods and services on which you will frequently have to pay sales tax. Whereas if you make lots of money, a lot of the money that you make is going to be put in investments and other things where you're not buying goods and services and are not paying sales tax. So the sales tax is an example of a regressive tax. The lower your income, the higher your percentage of income that is paid in the form of sales tax. But income tax systems around the world are progressive, just as we've seen here.